Hey guys, I'm recording the lesson. Very few people at the moment. Come on, let's see if more people join. Welcome everyone. How is everyone doing? Few people, guys, as I say, I'm very sorry for having to do this in such a rush. But as I say, yo, by the way, gold is flying right now. Sorry guys, because I'm in to this. Yo, come on. Gold is flying. Okay, guys, I will have to do the lesson for you 5. Okay, I hope you answer me and you are interactive with the lesson. Otherwise, it will be very boring. I don't know why so little people join, but yeah, let's get straight into it. Okay. So the lesson for today was pretty simple. Was on technical analysis. Okay, support and resistance, trend lines, indicators. Okay, and not much more. So yeah, let's get straight into it. By the way, guys, can you hear me well? Please answer me in the chat. Can you hear me well? Yes, okay, perfect. By the way, if you're still in gold, you should also trim profits, okay? I'm trimming off some right now. So yeah, make sure you trim off profits, guys. Okay, so let's start with this. I imagine all of you know what support and resistance are. Okay, these are very easy concepts. Okay, so yeah, let's start off by pointing out what support and resistance are. Okay, so let's go. Very easy, guys. A support is when price fails to break above a certain price. Okay, sorry, a resistance is when price fails to break above a certain price. For example, here, price is failing to break above, as you see on the right side, 1765. Okay, this means this is our resistance. Okay, when price reaches a point, a price, okay, and then goes back down, goes back up to that price, but doesn't break it, fails to break it, goes back down, and then does the same. Okay, when it's repeating this move, okay, of failing to break above a certain price, this means we have a resistance right here. Okay, pretty straightforward, right? Okay, the same with supports, but the other way around. Okay, when price fails to break a certain price to the downside, we call this a support. Okay, as we see, price is failing to break a certain price. In this case, with my mouse, just what's up with my mouse now? Okay, so as we see here, price is failing to break below the 1751. Okay, so yeah, price is forming a support. Very straightforward. Okay, let's look at some examples of this on the chart. Okay, we will see many. Look, I can already see a resistance here. Okay, as you can see, price is failing. Well, I can see a support and a resistance. Okay, as you can see, price here, price is failing to break below a certain price, okay, which is forming a support, and on the top, price is failing to break above, okay, which is forming a resistance. Okay, now it respects against support, now it respects against resistance, and then boom, it breaks down the support. Okay, so let's see, we have one. Let me mute everyone. Yo, welcome everyone, welcome to the live. Okay, so as we were saying, 1 and 2. So guys, which is the support and which is the resistance? Come on, answer me in the chat, please. Very easy, very straightforward. Just to make sure you understood, which I imagine all of you know already what support and resistance are. So yeah, answer in the chat, please. which is the support and which is the resistance? One is what? Support or resistance? Come on, guys, we need some interaction. Otherwise, this will get boring. Exactly. One is resistance and two support. Great. Okay, so yeah, guys, come on. This is very, very straightforward. Okay, let's look for more examples. Here we see another resistance. Okay. Oops. Okay, as you see, price is failing to break above this price, forming our resistance. Okay, price is just failing to break. Here, price does a fake out, which we looked into it on the market manipulation. You have a lesson on it. So yeah, as you see, price is just failing to break above this price over here, or faking it out, giving birth to a resistance. Okay, very, very straightforward, very easy. Okay, yeah, so let's keep on. And again, price is also here respecting a support. Okay, you see price is just failing to break the support. Okay, over here, and yeah, forming this support until price breaks it. Okay, then what happens when price breaks the support and resistance? Most of the times, as soon as price breaks below this support will become resistance. Okay, as you see here, price breaks below the support, so it becomes resistance, and here you could see some good sell opportunities. Me personally, I do not like to trade this support becomes resistance, and as most of you may know, what I like to do when this happens is wait. Instead of trading it here, I would like to wait for my Fibonacci areas to place a trade. Okay, because if you usually when you enter on these areas, you want to place your stop loss above the last high. Okay, and if I am entering here, if I'm entering here, and I want to place my stop loss here, it's too big of a stop loss for me. So I am always trying to enter here. In this case, price didn't reach my entry area, which is completely normal, completely fine. So this was a day not to trade for me. Okay, a day I wouldn't be trading. Okay, is this clear, guys? Is this straightforward? I imagine it is. So yeah, if you have had a look at the ebook, you must know all of this. Okay, this must be very easy for all of you. So yeah, let's keep on with today's lesson. The next thing I want to look at is at trend lines. Okay, trend lines are basically, essentially, they are the same as support and resistance, but with a certain degree of inclination. Okay, but at the end, the logic behind them is the same as for supports and resistance. Okay, let's see. So for example, sorry guys, let me mute everyone. Welcome, by the way, to everyone that's joining late. No problem. Okay, remember the lessons are recorded and stored. So yeah, if you join late, don't hesitate. You will have the lessons recorded. Come on, let's look for more examples. Now let's look at trend lines, okay, which is essentially the same as a support and resistance, but with a degree of inclination. So if a resistance is when price is failing to break above a certain price, this right here forms a resistance here. Okay, so a trend line would be the same, but with some inclination. Okay, so price fails to break a certain, now it's not a certain price, but it's a certain, well, it fails to break a trend line. Okay, so in this case, you see, essentially, this is a resistance, but it has some degree of inclination. Okay, which means this is a, we could call it resistance, but a trend line resistance. Okay, so look, I can see a very clear example here. You know, just right here, you have one here. Okay, as you see, price is just failing to break above this resistance. Okay, with inclination, so we then call it a trend line. Exactly the same with support, with the bottom trend line. Okay, with a trend line that acts as a support. So essentially, a support would be this, okay? And a trend line that acts as support would be exactly the same, but with a certain degree of inclination, okay? So this would be a trend line, which is acting as a support, okay? So straightforward, right, guys? Easy, right? Very easy. Let's look at examples. For example, I see another one here. Okay, I see an example there. Let's see. Guys, this is pretty straightforward, right? I shouldn't be losing much time on all this because this is pretty straightforward, I think, and most of you will already know. So here, another one, you see a resistance, which price is failing to break, okay? But with a certain degree of inclination. Very, very straightforward, okay? Then let me explain you why I really don't look at support and resistance, okay? And especially with gold. Gold really likes to not respect support and resistance. It does, okay, to some extent, but it will always look for liquidity grabs, for fake outs, for you'll see for sure we will find one somewhere here. In this case, price really did respect the trend line, respected the trend line greatly. Okay, but usually price gold, especially, okay, it tends to fake out, okay, look for supply and demand zones and look for liquidity grabs. That's why if I am placing a trend line is to look for a liquidity grab above or below it, okay? What's the major difference between trading using supply and demand versus support and resistance? Okay, supply and demand are basically zones that happen in the market due to orders, okay, and institutional action happening, okay? Support and resistance, not that much, okay? Supply and demand, if you have looked at the ebook, are basically, okay, you see zones where price has had some indecision followed by strong institutional move. You see the big institutional candles. So here we would draw a demand zone. And as you see here, we would have had a great trade, okay? Support and resistance areas aren't always followed by strong institutional move. As you see here, price formed the resistance, okay, but the moving wasn't institutional, okay, it was a slow move. So as you see, when price came back, it faked out. You see how it faked out? I'm not sure if this was clear enough, but yeah, guys, if you go over the supply and demand and yeah, supply and demand, liquidity, and all of the videos in the Snipe Out and ebook, you should understand this very clearly, okay? Why I'm not trading support and resistance, but yes, supply and demand, okay? You will see. Let's talk about price action. Basically, all of this we're talking about right now is price action, okay? Price action, for me, what I understand for price action, because at the end, guys, everything is relative in trading, okay? I will understand that thing for price action. You can understand another thing, okay? At the end of the day, everyone has to understand, has to relate, let's say, all of the concepts to their style of trading, okay? And apply them that way. But yeah, basically price action is what price is doing, okay? That's it. What price is doing without indicators, without any other thing than just price, okay? Just price. Okay, price combined with technical analysis, supply and demand, that's price action, no more, okay? Engulfing candles, all of this is price action. Everything which does not have to do with volume or indicators, well, volume to some extent as well, yeah, but price action basically is just taking into account the price, okay? No moving averages, no nothing else, okay? Just price action, okay? What the price is doing, the momentum the price has, etc. Okay, price action. Okay, is this clear, guys? Pretty straightforward, okay? Support and resistance, trend lines. You all must know this. If not, you can go over the ebook, which is pretty well explained, okay, in detail. So all of you, if you combine the knowledge on this video and the ebook, you will understand these concepts very easily, okay? Now let's move on to indicators, okay? And why I don't like to use indicators. Let's see. Start off, just so you know them, okay? Let's start off with the moving averages. Okay, let's start with a simple one. Okay, so basically this I have right here is a simple moving average. Let's grab a clean part of the graph. So this right here is a moving average, okay? A 9-period moving average. What does this mean? Let me cut. Let's see if I can get the replay. Hold on, sorry. Let me cut over here. Okay, this is a moving average. So how is this line plotted? In this case, it's a 9-period moving average. What does this mean? Price makes well, let's look at the configuration. So I'm sure I'm saying it right. Source close, okay. So price is getting the close price of every candle, okay, during the last 9 periods and doing an average of these close prices for the last 9 periods and just plotting a point there. Okay, so let's say this point right here where I'm at, 1860, okay, where the moving average is, this is an average of the close price of these last 9 candles, okay? Pretty straightforward. Let's change this, for example, to 20 periods. And now you will see how the line will separate more from the candles, okay? Because we will be calculating it with the last 20 candles or periods, you see? How the line separates more from the candle. Therefore, yeah, this is basically how the moving averages are calculated. I do not like to trade using moving averages. I will tell you some strategies, some useful tricks and tips, okay, which you can apply with moving averages, but I would not recommend nobody trading with them if you are focusing on our strategy, okay, which only has to do with price action. So yeah, a good strategy or a good method, okay, with moving averages, which will help you to identify the trend is, for example, using a 20 moving average. And let's see if I can duplicate it. Well, let me add another one. Fuck, sorry guys, let me add another one and delete this. Moving averages can be useful to some people, okay, not for me, to identify the trend, okay? So, wait, my mouse is not working now, hold on, sorry. Okay, so it can be useful to identify the trend following the moving average cross, okay? Let's see. For example, this I know loads of people use this to identify the trend. I do not use it, I don't like it, but just for your knowledge, just so you know, loads of people will use, for example, the 20-period moving average, okay, simple moving average, SMA, with the 50-period moving average, okay, and for example, what they will do is, come on, let's see if it loads. Okay, you see now with gold, this is useless because gold is very, very choppy, okay? Which we love, but for traders that use this sort of tools, it's horrible. Okay, so what will traders do? Whenever the blue line, oh, sorry, let me change the color so to make it more clear. And let me change this so it becomes more clear. Sorry, guys. And let me change this color to, let's say, green. And okay. Okay, so loads of traders use the moving averages for the moving average cross. Okay, this means whenever, let's say, for example, the green line is below the blue line, they will look for sells. Okay, And whenever the green line is above the blue line, they will look for buys, okay? This sometimes gives great opportunities. For example, here, okay, the cross, great opportunity. But me, from my personal experience and more with gold, this just give loads of false signals, okay? So for example, if people are trading the moving average cross, they would be buying here, stopped out here, selling here, most likely stopped out here, selling here, stopped out here, buying here, stopped out here. So you can get very good trades, but I do not like using these tools at all, okay? So this is just for your knowledge. Then guys, there are plenty of other indicators, okay? Some useful, some not as useful. Me, I recommend you guys stick to a price action, okay, to our strategy, which is supply and demand. It does not include any indicator, okay? And yeah, I really recommend you guys sticking on to that. And now, well, I'm not sure if any of you want me to look at any other indicator. Do you guys have any question on any other indicator whatsoever? I'm not an expert at all on indicators, okay? It's not something I've ever been much into, okay? I have tried it, they do not work for me, so I do not use them. So if you do not have any question on that, we're going to move on to some price action, some price action and some structural patterns, okay? Head and shoulders, all of this sort of stuff, okay? So by the way, let's see if anyone has any question. I've been hearing order block. Yeah, order block essentially it's also the same as supply and demand, okay? At the end of the day, order blocks, people will identify their order blocks by looking at essentially the same concept as supply and demand, okay? Rally base rally, this right here is an order block, okay? And it's essentially the same as supply and demand. I know loads of people to identify their order blocks, okay? What they will do is they will go onto the 4-hour chart, for example. They will hop onto the line, okay? And let's see if I can find a clear example. And they will find their order blocks right here. Look, for example, here I see one, okay? You see drop, base, drop, clear, drop, base, drop, order block right there. Boom, you see perfect reaction. It has to be very clear, you know, drop base, drop very clear. You get also very tiny like this. This is also a good order block, you see right here. At the end, essentially, it's the same as supply and demand, okay, order blocks. I'm not sure if this answered, but I like to identify my supply and demand zones with the indecision candle followed by the large bootleg. Okay, what else? What else? Then, okay, let's look onto some structural patterns, okay, to end this session. As I said, this was going to be a fast session. I'm in a loads of hurry because I have real estate places to be this afternoon. So yeah, let's look at some structural patterns. By the way, guys, another reason why I do not like to use indicators is because they always show past information, okay? They will always show past information, which at the end, for me, it's not that useful to anticipate or to try to anticipate the future, okay? So yeah, now let's look. So guys, I have the gold trade open here on fire. I'm trimming off some, sorry. Let me just close some off right now, some more off. And yeah, okay, let's look at the main patterns, okay, that apply to gold, okay? The only patterns I look at, okay, guys, these are the only patterns I look at for gold. And these are very simple, okay? So first of all, these are very easy, okay? I will draw them. Let's see if you can go telling me their names. This is the first one. Come on, guys. Let's see if you can tell me the name of this pattern, right? First pattern. Come on, guys. I want to read them in the chat. Very easy. First of all, let's look at patterns. These patterns indicate, yes, double top easy. Double top and this. Come on, double top and triple top, very easy. I know all of you know. So yeah, double top and triple top. These are patterns that usually indicate a change in the trend, okay? For example, we have a bullish trend. As soon as price forms a double top, it then most likely changes to a bearish trend, okay? The same with triple top, exactly the same. And this will also apply. Let's see if I can flip it somehow. No, I can't. This will also apply with the floors, okay, which is exactly the opposite. Okay, so essentially this is a double, oops. This is a double floor, okay? And this a triple I. Sorry guys, I'm doing. No, by the way, sorry guys, I really don't, well, yeah, I do. Sorry, sorry, I just got mixed up. Are we in a double bottom right now? Let's see, let's see. We are in a double bottom, exactly, guys. Exactly. You see price is failing to break below this price, and now price is breaking the neckline right here. Okay, most of the people, I love that this is happening right now, so we can look at the example all together. Most of the people will place their trades as soon as price reaches the neckline, okay? As soon as price breaks and reaches the neckline, most of the people will start selling here. In this case, as it's a double bottom. Hold on. Most of the people will be placing their buys on this neckline, okay? What I like to do to trade safer, and I know it's something that happens over and over because I've been doing this for years, is instead of waiting for price on the neckline, I like to wait for it on the Fibonacci retracement golden zone, okay? I would like to wait for price here, okay? On this area, because always you have to place your stop loss above or below the last low in this case, okay? So my stop loss would have to be here. And if I were entering at the neckline, it would have to be too large for me to place it there. So I like to enter at the 0.76, and I know loads of institutions also like to enter at this price, at this area when this setup happens. So yeah, so today essentially I would like for price to break above this high, okay, leave a clear break, and then I will trace my Fibonacci tool from the lowest point, okay, to the high it does, and I will try to enter around my golden zone, okay? While most of retail traders and people are buying here and getting stopped out right below it, or just filling the market with liquidity, okay? And what would be a good way to set a take profit? So if you are trading this, if you look at the last video I sent on the group, I'm also sort of explaining how I will be placing my take profits. Okay, for today, how I would be placing my take profits. First of all, one on this supply zone, another on this next supply zone. Maybe I could also draw some Fibonacci from the highest to the lowest point. I could also look to take profits around this golden zone in case price wants to test this zone and keep on its bearish move. Okay. So yeah, essentially this is how I trade the double tops and double floors. Okay, if it was a double top, it would be exactly the same. So for example, look, let's look at here, price, as you can see, price here formed a double top. Okay, you can see price formed a double top. Look here, I think this is a past example. Okay, so essentially price right here formed a double top, okay, on this support before it kept on going down. Okay, then price here has the neckline. Okay, here price tried to break it, but this I wouldn't count it as a break. And then price went back up, this formed the double top, then broke the neckline. Okay, most retail traders are entering their sells here. You see these rejection candles. This is called a false inducement. Okay, this is tricking people to enter before time. Most of the people are entering here, price goes down, they load more, price goes up, they load. They have their stop losses above this high. Then what happens? They get all stopped out. And as smart traders, we are tracing our feed, okay, from the highest to the lowest point, and we're waiting for price at our supply zone, at our Fibonacci golden zone. Plus, on this area, we also have this demand zone, this supply zone. So we would have a triple confluence here to place our trade. And yeah, essentially that's. But don't you not get FOMO that it? No, guys, you have to. There is a, first of all, there is a high chance it will retest, okay? Secondly, you can't FOMO in the markets, otherwise you will be placing too big of stop losses and you will just be entering the stop loss C, which I like to call. So never FOMOing, guys. Place your buy limits, sell limits, and wait for the setups, okay? Like always. If not, you will just enter the stop loss C and the market will just keep on killing you, okay? Hold on, let me just send a screenshot of how gold is moving because it's great. Shit, sorry. Hold on, guys. Let me crop this right here, right now. Okay, guys, I'm back with you in a second. Okay, this is pretty straightforward. Then the next pattern I also like to look at for gold, okay, double tops and triple tops combined with breakouts of the necklines, then retest on Fibonacci. That's how I trade double tops and triple tops, okay? They won't get executed, the trades won't get executed 100% of the time, obviously, okay? We all know that. But there's a high chance that price retests after breaking out the double top or triple bottom, after breaking out the neckline, there's a high chance price retests our Fibonacci area. And this will allow us to have a great risk to reward ratio, okay? It will allow us a great risk to reward ratio. Because remember, we are placing our stop loss above this last high, okay? And our take profit, for example, we could target the negative 0.76. Okay, and this would give us good risk to reward ratios. If we were to enter on the neckline, we would have to place a much higher stop loss, okay, for us to hold the trade or act like a retail trader and place the stop loss there. Okay, and they would get stopped out. or act as a smart trader and place your stop loss here. Place your entry there and your stop loss at a good area. Okay, at the safe area. Okay, pretty straightforward. Now let's look at the last pattern. I like to look for gold, and these are flags. Okay, continuation flags. Remember, guys, all of this is on the ebook. So if you have a read at the ebook and then you come back to this video, I think you will have it all extremely clear. Okay. Oh, sorry. What am I doing here? So the continuation. Now we were looking at patterns that indicate a reversal in price. Okay, double top, triple top, double bottom, triple bottom. All of these indicate reversals in price. Okay, sorry, and I forgot one that indicates reversal before continuing. This is the shoulder, head, shoulder. Okay, the shoulder, head, shoulder. This, all of you know. Again, my way of trading is exactly the same as with supports and resistance. Okay, I like to draw my neckline. Okay, I like to draw my neckline, and as soon as price breaks, I know most of the people will be selling here, but I like to trace my fib always from the highest point to the lowest point. Okay, and then I will be looking to place my trades at around this area, okay, to keep on selling. There's a high chance price goes back to this Fibonacci because it's the way price will manipulate the traders in this area, grab more liquidity, and it's the way to place your trades with the safe stop loss, okay? And yeah, and having good risk to rewards. At the end of the day, it just makes logic that price respects more this area than this area, okay? It's a way price can grab liquidity from all of the people that are selling and buying on this area. Plus, it's a way that people have so they can enter at an area and place a stop loss safely, ensuring a good risk to reward ratio. Okay, pretty simple, pretty straightforward, and exactly the same with the inverted shoulder, head, shoulder. Okay, very straightforward, guys. Let's look at it in the chart. So let's see if we find an example. I am always trading this shoulder, head, shoulder, but now for the sake of the lesson, you will see how we won't find any example, but this is full, guys, like very, very full of this sort of examples. Let's see, come on. Example here, but this is quite choppy one. See, for example, price here formed, wait, let me read the chart. Is the current not a head and shoulder on the 5-minute time frame? Okay, perfect. Let me go right there and see better if it's a live current example. A live example. This right here, essentially, yes. The only thing I don't like about this head, shoulder, and head is that you see prices equaling here a high, okay? Equaling a low, okay? I like these patterns when they are at the top of a trend, okay? So if this would happen a few pips lower, that would have been better for me. But yeah, this is a shoulder, head, shoulder pattern, okay? So as you see, an inverted shoulder, head, and shoulder pattern. Here it breaks out. Okay, most people are entering their buys at the neckline. They will get stopped out. In this case, price came down to this area and then kept on going. So let's look at this. As you see, price, the neckline is forming. Most of the people are entering their buys there. They will get stopped out. Let's see if I can hide the price. Most of the people are entering the buys there. In this case, price, as I say, price, this won't happen 100% of the times. As you see, price did not come to the golden zone from the lowest to the highest, but if I was to draw it from this low to this high, price did go perfectly to the golden zone before keeping its uptrend, okay? And as you see, it did not respect the trend line. So whenever you're trading gold, okay, and you're trading these setups, always wait for the golden zone of Fibonacci, guys. I'm telling you, okay? This is what I do, and it's what really works good for me. So yeah, make sure you apply this. So what has stopped it from continuing now? What do you mean? For me, because I wasn't really focusing on that 5-minute head shoulder pattern, but like if I don't like, I find it completely valid, okay? But as I say, price is in this range, okay? I'm focusing more on the bigger picture today for gold, okay? For those of you that were trading this head shoulder pattern, you should have already been taking profits, okay? Because usually, let's see, you want to be setting your objectives, okay? Something like this. You see, it has already met the objectives for the people that were trading this head shoulder pattern. It has already met their objective, okay? They will already be taking profits, okay? So yeah, hopefully it keeps on going up. But like people that were trading this pattern, the professional ones will already be taking their profits, okay? Because usually you get from the head to the shoulder, okay? This is your objective, and you want to trade this from the last low after breaking the neckline, okay? You want to place that, and yeah, it should be exactly the same length. You see, this length equals exactly this length. And yeah, this is how people trade. So they will already be taking profits, the ones that were trading this 5-minute shoulder head shoulder. Did you understand this? Okay. Perfect. Then now let's look at the last continuation patterns I really like for gold. Okay, these ones are continuation, and these are the flags. Okay, the bullish and bearish flags, but I will show you how I like to look at them. Okay. Let me mute everyone. Okay. Then now let's look at the flags. Okay, these are patterns I really like as well for gold. And let's see, where is my tools? Right down here. Let's look at firstly the bearish flag. Okay. Why am I doing them? Let me make it more clear, sorry. These for me are the main patterns that apply for gold, okay? The ones I'm showing you right now, okay? The bearish flag and the bullish flag, okay? Okay, so let's see, this is a bearish flag, okay? And this is a bullish flag. First of all, let me explain to you why these flags work, okay? These flags are great because when price is going in a downtrend, for example, and price then does a low, sorry, does, well, a low, then a high, then a higher low, and a higher high, okay? This is the famous thing that everyone is talking about now, the change of character, okay? You see, you have a change of character here. But remember, 90% of change of characters are false confirmations, okay? This is great flags because as soon as traders see these, okay, they will start loading buys. They will see, they will be like break of structure, change of character, blah, 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 buy, 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 buy. They are buying, 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 giving so much liquidity to the institutional investors, so much liquidity to institutions, okay? Because overall the trend is bearish, the market is bearish. So this will just be a method of, let's say, not manipulation, but building more liquidity in the market that then institutions will take over and then keep the price going down, okay? This happens a lot from zone to zone, okay? Let's see, come on, let's find examples. These things will happen a lot, okay, from zone to zone, let's see. So for example, okay, you see this, both of this demand zone as demand and supply zone. Okay, most likely from price from here to here, it did couple. Well, I think I did not look for the best example. Hold on. Come on, let's see if we find examples now. For example, look, here we have one. No, but it's not clear enough. Again, guys, these are examples which are there all the time, okay? But now when you are looking for them, you don't find them. It's just something that tends to happen. But yeah, for example, look, here we have a bearish flag, okay? Well, there should be many. I don't know why I can't find them now. Well, let me show you. I think this is a good example right here. So these things tend to happen from zone to zone, okay? When the institutions grab liquidity, okay, for their trading. So for example, here, most likely there was a demand zone. Okay, you see there. And up here for sure, where price stop. Oops. A supply zone, okay? And here we have this movement from, yeah, maybe it's too high, but remember they happen on all of the time frames. Like if you go to the 5 minutes and you're trading from zone to zone, you will see many flags. Okay, but it's just so you see the example on the bigger picture, okay? So our strategy is trading from zone to zone, okay? Always zone to zone. Then what happens? We know this is a demand, this is a supply. We want to trade in the hypothetical case from this zone to this zone, okay? So we have it clear. Our plan is clear. Buy from this zone, sell on this zone. Institutions also have it clear. They do not care what happens here. They are buying on this zone and selling on this zone. But then what is happening all the time? As price is going up, you see price is forming bearish flag. Sorry, bullish flag. Okay, what happens here? Retail traders will go to the lower time frames and they will see, oh, lower high, lower low, lower high, lower low, change of character, blah, 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 selling. Institutions get all of this liquidity, boom, spike it up. Okay. Here we have another one. If we go to the lower time frames, for sure, these are much more clear. Another one where price does exactly the same, grabs more liquidity, okay? Doing exactly the same. Another one right here. Okay, boom. Okay, and this is just how the market will keep on grabbing liquidity thanks to the bearish and bullish flags, okay? So remember, these patterns will work very good. Okay, these patterns work. Let's see where we were. These patterns will work very good when trading from zone to zone. Once you're at a zone, at a 4-hour demand zone, let's see if I find this example now again. Sorry. Okay, right here. Okay, so we have our plan clear. Buy here, sell here. And we have these bearish flags in middle, which you know they are great for the market to grab more liquidity and us to fill our positions. And this is what institutions are basically doing okay, but as soon as price reaches our supply or demand zones, we are not going to focus on the flags anymore, but we're going to now believe on change of characters, okay? Change of characters that happen between zones most likely are false confirmations. Change of characters that happen on major zones are most likely confirmations, actual confirmations, okay? So is this clear? For example, here we see again, this, I'm telling you, all of these, if not flags, they are very similar, but the concept is the same, okay? Remember, not everything is exact in the market. So yeah, you see, the market is constantly looking for liquidity, okay? Trying to trick retail traders, okay? So is this clear, guys? Is this clear? You will see, you will get used to this, okay? I recommend you also go over the ebook because you will find better examples there than the ones I'm pointing out here. But yeah, and then as soon as price reaches this zone, we are going to forget about bearish flags and wait for a reversal in price, okay? And then we are going to believe on change of characters, okay? So guys, this is it for today. I hope it's clear, okay? Pretty straightforward, okay? Today's lesson, I would really try to focus only on the last part of the lesson, as I do not use indicators. I do not focus on support and resistance or trend lines to place my trades. So yeah, I would pretty much focus on the last part of today's lesson. And yeah, now I will give you a few more minutes. If anyone has any question, feel free to ask. And yeah, I will be ready to answer you guys. So let's go. A few more minutes, 3-4 more minutes to answer questions. So if anyone has a question, feel free. And we will be done with today's lesson. Let's see. Nothing from me, thanks. Okay, guys, so if none of you have any question, feel free to leave whenever you want to. And I hope today's lesson was clear. If not, go over it again. I will upload it now onto the vault. And yeah, just go over it, go over the ebook, and yeah, go for it, guys. Okay, guys, I will be closing right now the meeting. It has been a pleasure having you all here, like always. Hope to see you on the next live. As I said, I won't be able to go TikTok live today. I have to go to the city to do some to manage some flats and some things. So yeah, I will keep you all updated, guys. Have a great trading day. Remember, follow the plan. Don't overtrade. And yeah, come on, guys. Have a great day. Let's go.